Hello guys, welcome to our YouTube channel, QueBusiness. Please like and subscribe. Thanks. Today our topic is on what is Bitcoin trading. Bitcoin trading is how you can speculate on movements in the cryptocurrency's price. While this has traditionally involved buying Bitcoin through an exchange, hoping that its price will rise in time, cryptocurrency traders are increasingly using derivatives to speculate on both rising and falling prices to make the most of Bitcoin's volatility. With IG, you can take a position on the price of Bitcoin with financial derivatives like CFDs. This product can enable you to take advantage of the price movements in either direction without taking ownership of the underlying coins, meaning you won't need to take responsibility for the security of any Bitcoin tokens. Steps to trading Bitcoin. Learn what moves Bitcoin's price. Pick a Bitcoin trading style and strategy. Choose how you want to get exposure to Bitcoin. Decide whether to go long or short. Set your stops and limits. Open and monitor your trade. Close your position to take a profit or cut a loss. Number 1. Learn what moves Bitcoin's price. To get in on a surging opportunity or short the latest bubble, you first need to understand the factors that have an impact on Bitcoin's price. Bitcoin supply. The current Bitcoin supply is capped at 21 million, which is expected to be exhausted by 2140. A finite supply means that the price of the Bitcoin could increase if demand rises in the coming years. Bad press. Any breaking news which concern Bitcoin's security, value, and longevity will have a negative effect on the coin's overall market price. Integration. Bitcoin's public profile depends on its integration into new payment systems and banking frameworks. If this is carried out successfully, demand might rise, which will have a positive effect on the Bitcoin's price. Key events. Regulation changes, security breaches, and macroeconomic Bitcoin announcements can all affect prices. Any agreement between users on how to speed the network up and could also see confidence in Bitcoin's rise, pushing the price up. Number 2. Pick a Bitcoin trading style and strategy. Day trading, trend trading, Bitcoin hedging. How to day trade Bitcoin. Day trading Bitcoin means that you will open and close a position within one single trading day, so you won't have any Bitcoin market exposure overnight. This means that you will avoid overnight funding charges on your position. This strategy could be for you if you are looking to profit from the Bitcoin short-term price movements, and it can enable you to make the most of daily volatility in the Bitcoin's price. How to trend trade Bitcoin. Trend trading means taking a position that matches the current trend. For example, if the market is in a bullish trend, you would go long. If the trend was bearish, you would go short. If this trend started to slow or reverse, you would think about closing your position and opening a new one to match the emerging trend. Bitcoin hedging strategy. Hedging Bitcoin means mitigating your exposure to risk by taking an opposing position to the one you already have open. You would do so if you were concerned about the market moving against you. For example, if you own some Bitcoins but were concerned about a short-term drop in their value, you could open a short position on Bitcoin with CFDs. If the market price of Bitcoin falls, the gains on your short position would offset some or all of the losses on the coins you own. Number 3. Choose how you want to get exposure to Bitcoin. There are a few different ways that you can get exposure to Bitcoin. Trading Bitcoin derivatives, buying Bitcoin through an exchange. Crypto 10 Index. Trading Bitcoin derivatives. Trading Bitcoin derivatives with us means that instead of owning Bitcoin outright, you will be speculating on its price with CFDs. As a result, you will be able to take a position on the Bitcoin's price, rising by going long or falling by going short. Here are other benefits of trading Bitcoin derivatives with us. Leverage and margin. CFDs are always traded with leverage, which means you will only have to put up a deposit, known as margin, to get full market exposure. Deep liquidity. Thanks to our large client base, our Bitcoin market is very liquid. This means you're more likely to have your orders filled at your desired price even if you deal in lot sizes. Hedging, shorting with the derivatives can be an effective way to hedge your portfolio and protect against market declines. Buying Bitcoin through an exchange. Buying Bitcoin through an exchange is mainly for those who use a buy and hold Bitcoin strategy. This is because buying through an exchange means that you are taking direct ownership of Bitcoin with the expectation that its price will rise. That said, there are some problems with buying Bitcoin through an exchange. Bitcoin exchanges often lack proper regulation and the infrastructure needed to respond quickly to support requests. The matching engines and servers on Bitcoin exchanges are often unreliable, which can result in the suspension of the markets or reduced execution accuracy. Crypto 10 Index. As well as trading Bitcoin derivatives or buying coins directly from an exchange, you can trade Crypto 10 Index that gives you exposure to 10 major cryptocurrencies like Bitcoin in one single trade. This index speculates on these cryptocurrencies and closely tracks or mirrors the underlying market prices of them. Number 4. Decide whether to go long or short. Trading financial derivatives make it possible to go both long or short. Depending on the current market sentiment, going long means that you expect Bitcoin's price to rise, and going short means that you expect the price will fall. Number 5. Set your stops and limits. Stops and limits are crucial risk management tools, and you have several to choose from when you trade with us. Normal stops will close out your position at a set level, but they could be liable to slippage if the underlying market prices changes quickly. Trailing stops follow favorable market movements to lock in profits while capping your downside risk. However, they too could be subject to slippage. Guaranteed stops will close out your position at a set level, regardless of any slippage. Guaranteed stops are free to set, but you will be charged a fee if your guaranteed stop is triggered. Number 6. Open and monitor your trade. To open a Bitcoin trade, you would buy if you thought that the price was going to rise, or sell if you thought the price was going to fall. Once your trade is open, you will need to monitor the market to make sure that it's moving in the way you anticipated. The technical indicators available on our trading platform can help you determine what Bitcoin's price might do next. Indicators can also help you monitor current market conditions like volatility levels or market sentiments. Number 7. Close your position to take a profit or cut a loss. You can close your position whenever you like to make a profit or to cut a loss that has reached a level that makes you uncomfortable. Your profits will be paid directly into your trading account, while your losses will be deducted from your account balance. Thanks for watching. Please like, subscribe,